Welcome, Tree of Knowledge community. Ready to start investing with just $200? No worries. Today I'll show you how to get started, even if you're a total beginner. Stick around for bonus tips. You might think $200 isn't enough to make a difference, but that's just a limiting belief. I started with way less, hustling to make every dollar count. The key is to start somewhere and let the power of compounding work its magic. How do you feel about your current financial situation? Excited to start investing but unsure where to begin? You're in the right place. Let's get started with step 1, setting your financial goals. This is crucial because it gives you a clear target to aim for. What are you hoping to achieve with your investments? Saving for a down payment on a house? Dreaming of retiring early? Or simply growing your wealth? Write down your goals and be specific. Instead of just saying, I want to save for retirement, set a concrete goal like, I want to have $1 million saved by age 65. Having a specific and measurable goal will keep you motivated and on track. Think about the time frame for your goals. Are they short-term, like saving for a vacation next year, or long-term, like retirement? This will determine your investment strategy. For short-term goals, consider lower-risk investments, like high-yield savings accounts, or even better, a money market fund that you can use like a savings account. For long-term goals, you can afford to take on more risk with investments like index funds, ETFs, stocks, or real estate. Your financial goals are personal to you. The key is to identify what's important to you and create a plan to achieve it. Once you understand your goals and time frame, think about how much risk you're comfortable taking. Setting financial goals is the first and most crucial step in your investment journey. Now that you've set your financial goals, it's time for step 2, educate yourself. Knowledge is power, especially in the world of investing. What's the difference between an index fund and an ETF? There are tons of resources available to help you learn. One of my favorite ways to learn is by reading books. Here are a few recommendations. The Intelligent Investor by Benjamin Graham, Rich Dad, Poor Dad by Robert Kiyosaki, and The Simple Path to Wealth by J.L. Collins. These books will give you a solid foundation in investing and personal finance. In addition to books, there are countless websites, blogs, and YouTube channels dedicated to investing. The Motley Fool, Investopedia, and of course, my channel are great places to start. I enjoy watching videos that feature Warren Buffett. Stick with reputable sources and be wary of get-rich-quick schemes. Investing is a lifelong learning process. The market is constantly changing, so stay up to date on the latest trends and strategies. By continuously educating yourself, you'll be better equipped to make informed investment decisions. Remember, investing isn't just about picking stocks. It's about understanding how the market works, managing risk, and making smart decisions with your money. You've set your goals and started learning. Now it's time for step 3, choosing a brokerage account. This is where you'll buy and sell your investments. Think of it like your online investing hub. There are many brokerage accounts out there, each with their own pros and cons. Since you're starting with $200, look for low fees, no account minimums, and a user-friendly platform. Some popular options for beginners include Robinhood, Fidelity, and Charles Schwab. They all offer commission-free trading on stocks and ETFs, which is huge for small investors. Consider the type of account you want to open. If you're saving for retirement, you might want to open a Roth IRA or traditional IRA. These accounts offer tax advantages that can help you grow your money faster. Research different brokerage accounts and compare their features, fees, and investment options. Read reviews from other investors to get a feel for their experiences. Once you've found a brokerage account that meets your needs, opening an account is usually quick and easy. Your brokerage account is your gateway to the world of investing. Choosing the right one can save you money on fees and make the entire investing process smoother. Now for the exciting part, step 4, investing your $200. But don't go chasing after the next hot stock tip. Remember, we're playing the long game here. With $200, your best bet is to start with low-cost investments like index funds or ETFs. Think of an index fund like a basket of stocks that tracks a specific market index, like the S&P 500. When you invest in an index fund, you're essentially buying a tiny piece of all 500 companies in that index. ETFs are similar, but they trade on an exchange like individual stocks. Both index funds and ETFs offer instant diversification, meaning your risk is spread out across hundreds or even thousands of different companies. This is crucial, especially when you're starting small. You don't want to put all your eggs in one basket. By diversifying, you're protecting yourself from the volatility of individual stocks. Another great thing about index funds and ETFs is that they have super low fees. Some index funds and ETFs have expense ratios as low as 0.03%, and Fidelity even has zero expense funds, which means you're keeping more of your hard-earned money. Starting with index funds and ETFs is like setting your investment portfolio on autopilot. Focus on building a solid foundation for your investment portfolio with low-cost, diversified investments. Step 5. Diversify your portfolio. Even with just $200, you can still spread your money across different asset classes to reduce risk. First, ask yourself, what is your level of risk? You wouldn't want to put all your money into one single stock, right? What if that company goes bankrupt? The same logic applies to your investment portfolio as a whole. How do you diversify with $200? You could allocate a portion to a broad market index fund like the Fidelity Zero Total Market Index Fund, FZROX. This gives you exposure to the entire U.S. stock market. Allocate another portion to a bond fund like the Vanguard Total Bond Market Index Fund, ETF, BND. Bonds are less risky than stocks and can provide stability to your portfolio, but you get a lower yield. What's your risk comfort level? Another option would be to consider adding a small allocation to a real estate investment trust, REIT, ETF, like the Real Estate Select Sector Spider Fund, XLRE. Many brokerage accounts now offer fractional shares, which means you can buy a portion of a share. Diversification helps to mitigate risk and protect your portfolio from market volatility. Even with a small amount of money, you can diversify your portfolio. Step 6. Monitor and adjust. Congratulations! You've set your goals, educated yourself, opened a brokerage account, invested your $200, and diversified your portfolio. You're officially an investor. But the journey doesn't end there. Investing is a marathon, not a sprint. It's not about timing the market or chasing quick profits. It's about staying consistent, being patient, and letting your investments grow over time. You don't want to just set it and forget it. It's important to keep an eye on your investments and make adjustments as needed. How often should you check your portfolio? That depends on your risk tolerance and time horizon. If you're investing for the long term, you don't need to obsess over every daily fluctuation. However, review your portfolio at least once a quarter or every 3 months. This gives you a chance to see how your investments are performing, rebalance your portfolio if necessary, and make sure you're still on track to meet your financial goals. As your income grows and your financial situation changes, adjust your investment strategy accordingly. The market is constantly changing, and your investment strategy should evolve with it. By monitoring your portfolio and making adjustments as needed, you can stay on track to achieve your financial goals and build long-term wealth. And there you have it, a simple and easy guide to start investing with just $200. Remember, the key to success is setting clear goals, educating yourself, and staying disciplined. Even if you can only invest a small amount each month, the power of compounding will work its magic over time. The most important thing is to start today. Don't let fear or procrastination hold you back from building a brighter financial future. If you have any questions or concerns about starting your investment journey, leave them in the comments below. We'd love to hear from you and help you on your path to financial success. Don't forget to like this video, subscribe to our channel,